let's move on to unearned revenue. Unearned revenue, you can think of it as a deposit for an order. For example, you walk into a furniture store and you see this beautiful sofa that is worth, the selling price is $3,000 plus GST. And $3,000 is such a large amount, right, of money. And the business, you can come to the salesman and say, I want that sofa. And that salesman says, we don't have this in stock. We can make an order for you and it might take 3 weeks to get here. Now, if the customer says, yeah, just make an order, and then the business orders it, and then 3 weeks later, the sofa comes and the customer is nowhere to be found, nowhere to be contacted, right? Then the business just wasted $3,000 and no one wants the sofa except for that customer, right? So to prevent that from happening, the business says, when the customer says, yeah, just make that order, I want that sofa, the business says, how about you put some deposit in to us to make sure that you will get back here to get that sofa. Then the money that the customer puts in as the deposit is called unearned revenue. Why is it unearned? Because normally, to consider it as a revenue, the customer would receive the inventory first from the business, right? If the customer pays in cash immediately, that will be a cash sales. If no cash, that will be a credit sales. But in this case, in the example that I just told you about, we haven't given the customer the sofa. He just made an order. We don't even have a sofa to deliver immediately, right? So that's why it's unearned. We haven't done anything to the customer yet. Therefore, we don't have the right to earn that. Let's just say that the customer put in a deposit of $500 for the $3,000 sofa. We haven't, as a business, we haven't earned the right to get that $500 because we haven't done anything. We haven't delivered any inventory for this customer. That's why it's called unearned revenue. Right? Think about it. When you or the business is receiving this $500, the business is actually owing or have the responsibility or obligation to deliver the sofa to that customer, right? Therefore, when the business is in debt to someone, in this case the customer, the business is having a liability. Therefore, unearned revenue, don't be tricked by it, even though it has revenue in it. Unearned revenue is actually a liability. Okay? So first thing first, you are receiving a deposit. That's the stage one. Receiving the deposit. Deposits. Okay? I'm going to delete this part. I'll keep this diagram. If you have a look at the example on Canvas, it says, Hillside Motel placed an order with a furniture store for 20 coffee tables at a price of $200 each. The total of the order is $4,000 plus $400 GST. The furniture store required a deposit of 20% of the selling price to secure the order, which is similar to the example I just told you about. So 20% of the selling price. What is the total order? What is the total selling price of the total of the order? 20 coffee tables, 200 each. So the total sales would be 4,000 without GST, right? So how much of the deposit out of this? 20% of the 4,000. Right? That would be, I don't know how much that is. 4,000 divided by 5. That would be 8. Yep. 1,000. Okay? So that's the deposit. Sorry, 800. Sorry. It's right here, 800. I'm not good at math. That's why I'm teaching accounting, not statistics. Alright, 800 is the deposit. So the business is receiving the $800 as a deposit, right? So make a guess. What would be the general journal entries when the business is receiving $800 of cash? Cash at bank would be debit, right? So, where's my blue? Cash at bank would be debit. How much? 800. Where is this coming from? Or in other words, what is the purpose of this $800 coming into the business? It's for a deposit, right? And the deposit, in another word, is called unearned revenue. So it comes from unearned revenue. $800. This is stage 1, receiving the deposit. And if you look on Canvas, it should be like that. I don't know if you can see that on the screen, but that's the screen and that's on Canvas. So if you can't see it in the video, you can look it up on Canvas. So that's the first stage. Stage 2. Now, the customer made an order, they pay the deposit. What's the next stage, do you think? Of course, it's when the order has completed, or in other words, the order has come to the store and we deliver that to the customer, right? Now, there are 2 scenarios when you deliver the deliver the item, the inventory to the customer. There are 2 scenarios. Either they pay the rest of the sales. Either they pay the rest of the sales, or they say, I don't have any cash right now. Can I come back to your store later and I'll pay for it later? Okay. Now in this particular course, we're only covering the second scenario, which is when the customer says, I don't have any cash right now. I can't pay you right now. Can I come back to the store and pay you later? Okay. So let's do that. Stage 2, deliver. Deliver the order. Now, when you deliver the order, you've earned the right to this deposit, right? Remember, before, when the customer pays the deposit, we haven't done anything to the customer. Therefore, this $800 is called unearned revenue. We haven't earned that revenue. But when the second stage is the business deliver the product that they made the order for to the customer, right? Then we have earned the right to the revenue that we're supposed to get. And this is the total revenue that we're supposed, or we've earned the right to get when we deliver the product. Okay, and in this case, the product is 20 coffee tables. Right, so again, when the business has delivered 20 coffee tables to the customer, we have earned the right to the total sales, which include the $800 of unearned sales revenue. Or in other words, the $800, the deposit that the customer paid before, now has been earned, from unearned to earned. So we first of all, the first step is to have entries to show that these $800 have been earned. Okay? So remember, if it was unearned before, now it's earned then this $800 should be zero, right? Because, or in other words, we no longer have any unearned revenue. Okay? So how can you make unearned revenue debit $800 to unearned revenue zero? From $800 on debit to zero. How do you do it? Move this one, have another entry that have $800 on credit. So unearned, this is credit, so we make it debit. So unearned revenue 800. Okay, before it was $800 on credit, now it's $800 on debit, so it evens out, meaning we no longer have unearned revenue because we've earned everything, right? We no longer have unearned revenue, and we have earned revenue, therefore the revenue should be credit, right? So we call it sales revenue $800 on credit. Do you remember that? Every time that we have cash sales or credit sales, sales revenue would always be on credit when we've earned it. Same thing here. When we earn it, sales revenue should be on credit, and unearned revenue debit. Okay. This is to recognize. I'm going to make a little note here. Converting from. Converting unearned revenue to earned revenue. Okay, so these two entries here is to say the $800 that we received, the business has received before, now has been turned into earned revenue or sales revenue. Now remember that the scenario that I gave you was when we deliver the product to the customer says, we don't have any cash right now, can I pay you later? The customer receives the product but will pay later. That makes this sales into a credit sales, right? The customer has received the products but no cash involved. So it's a credit sales. What are the general entries for credit sales? Very, very simple. Accounts receivable. I'm going to write it as AR. Okay. Debit, sales, credit, GST clearing, credit, and inventory, debit, and cost of sales, credit. Okay. Now let's talk about sales. You know that the moment that we have delivered the 20 coffee tables to the customer, we have earned the right to claim the entire sales, the total sales, right? And the total sales here, as we know before, is 4,000 in total, right? And this 4,000 has included the $800 of unearned sales. Now, we have already included the $800 in the 4,000, right? And we have earned it. We have recognized the sales revenue of 800, right? So we have earned 800, and we have recognized the 800, but we are supposed to earn 4,000. So how much of sales revenue should we recognize more, right? The total sales is 4,000. We have recognized 800. We should recognize 3,200 more, right? Therefore, this one here, the sales down here should be 3,200. If you add this sales to this sales, it's 4,000, which is the total sales that we're supposed to earn and get. Next, GST. Usually, GST should be 10% of this, which makes it 320, right? But if you pay attention, when you recognize the sales revenue, we haven't mentioned GST. Same thing up here, we haven't mentioned any GST. So the GST for this sales hasn't been recognized at all, which is the GST on top of this sales should be 4,000, 10% of 4,000, which is 400. Right? But we haven't recognized the GST here. We haven't recognized the GST here. Therefore, we have to recognize that GST here. So it's not 320. It should be 400. And 400 would be 320 of these sales and $80 of these sales. Okay, 400. This is very important. This is the most common mistake students often make when they are recording these entries. The moment they see sales 3,200, they immediately write GST clearing 320, which is 10% of this, which is also wrong. Alright, so you have to pay attention here. And accounts receivable naturally would be the total of this one and this one, which is 3,600. Okay, which is also the entries for this up here on canvas. Now, for inventory and cost of sales, it should be mentioned in the here in the question. The cost of sale was determined to be 1,800. Therefore, you can immediately put the 1,800 in here. Okay, so these are the entries in stage 1. These entries is to say we have received a deposit from the customer, but we haven't done anything for that customer. And in stage 2, we have delivered the product to the customer. Therefore, now we are recognizing the sales for the entire order. However, since the customer has already made the deposit before, therefore the credit sales or the credit revenue that we are recognizing should be $800 less because they've already paid 800. Okay. Now, for unearned revenue, I've already said before, it's a liability. At this point, you should already know how to explain one account to be a certain classification. Sales revenue is a revenue, accounts receivable is a current asset, GST clearing, liability, inventory, asset, and cost of sales is a, sorry. It should be cost of sales debit and inventory credit. Okay. We good?